my view is what's probably going to happen on this cycle, based on prior cycles and percentages and everything else, is we started this cycle at about 50,000. I think we'll probably run up to about 200,000 sometime in the next year or two. And then everyone will be levered up and talking about how Bitcoin's going to gazillions of dollars and overexcited, all that other stuff. And then it'll correct and it'll come from 200 back to 100. And that'll be a good time to buy it again. So this pattern, I think, will continue to present itself. What Bitcoin did was they solved the problem of creating something where they created digital scarcity. And so they've got an algorithm and a system that's distributed 20,000 nodes around the world, a bunch of miners who process the transactions, where there's legitimate digital scarcity. There will only be 21 million Bitcoins ever.
According to Lawrence Lepard, Bitcoin has seen extreme volatility throughout its history as an asset, including multiple corrections of more than 50%. However, the vast majority of those who have owned Bitcoin for more than 4 years have made sizable gains. These cycles, which are marked by strong rises and sharp declines, aren't random, according to Lepard. Rather, they show how Bitcoin has developed into a game-changing asset class. According to Lepard, this cycle may result in Bitcoin hitting $200,000 in the upcoming year or two. Although there will probably be a correction, he thinks it might level off at $100,000, showing a trend of rising highs and falling lows as Bitcoin develops and becomes more widely accepted in the world financial system. Lepard also cautions investors. The price of Bitcoin's asymmetric potential is its volatility. Success in this market requires patience and an understanding that these corrections will become less dramatic as adoption grows. Before we dive into Lepard's insights, please take a moment to like this video, subscribe to the channel, and turn on post notifications for daily updates. We'd love to hear your thoughts in the comments below, so don't hesitate to share your observations. Thank you, and enjoy the video.
Bitcoin's one of those things where almost nobody knew about it 10 years ago, and more people know about it now, but still the percentage of people who own it is quite small. And so if it's growing into a form of money, and I believe it is, and more people are coming to see that the properties that it has are valuable, and I think that's occurring. You can see the evidence of that. Then you've got more people competing for the same number of coins outstanding. So there are 46 million millionaires in the world. There are 21 million Bitcoin. So every millionaire cannot own one Bitcoin. And yet you can buy a Bitcoin for 97,000 right now. So what I would contend is that Bitcoin is going to continue to become more valuable. Now, the price you pay for that asymmetric upside is the fact that because it's an emerging asset, it's extremely volatile. And it's had 4 drawdowns of well over 50%. And so when you buy it, you have to understand that but however, I'll say that, but then I'll also say that anyone who's held for more than 4 years is ahead. So it goes through these cycles where it runs really hard and then it corrects, and then it runs really hard and then it corrects. And each run takes it to a new all-time high, and each correction doesn't come down as far as the last low, but it comes down quite a bit. So my view is what's probably going to happen on this cycle, based on prior cycles and percentages and everything else, is we started this cycle at about 50,000. I think we'll probably run up to about 200,000 sometime in the next year or two. And then everyone will be levered up and talking about how Bitcoin's going to gazillions of dollars and overexcited, all that other stuff. And then it'll correct and it'll come from 200 back to 100. And that'll be a good time to buy it again. And then the next cycle, the last cycle low was after Sam Bankman-Fried. It was at 15. I was buying it there. I'm really glad I did. It's at 90 something now. Bought it at 15. So this pattern, I think, will continue to present itself. The drawdowns are becoming slightly lower with each cycle. It doesn't draw down quite as much. So the volatility is decreasing over time as more and more people understand it. I don't know if it's happening in Europe, but in the United States, a big deal over here is that the ETFs, when I was trying to tell friends about it, one of their first concerns was, well, Larry, that's not going to work. The government's going to ban this thing. They're going to realize it's a threat to fiat currency. They're not going to let you keep it. And that could still occur at some point in the future if we had a Democratic government, a Democratic administration. But when the U.S. approved the ETFs, that was a big deal. I mean, the U.S. SEC said, hey, it's a commodity. You guys can own it. Well, that really changed the landscape of it. So I believe we're in a multi-decade process of it becoming an important asset to own. It's a digital asset, and we live in a digital world, and it's important to own. It's scarce, 21 million. So I fully expect that, and there are a lot of models that I could talk about that show this, that in, a number of years, this will be $1 million a coin, and perhaps in 20 some odd plus years, it could be $10 million a coin, which is kind of crazy right now because you can buy a coin for, $95,000 or $96,000. So, gold is sound money, has been sound money for 5,000 years and is much more widely distributed and, can't be counterfeited or not easily counterfeited. And so, and you can possess it and so forth, so on and so forth. And so, it's what I call analog sound money. Bitcoin, quickly speaking, is digital sound money. It's what happened with Bitcoin is they invented the concept of digital scarcity. If you think about things which are digital, like CDs and music and movies and phone call, anything digital, a file with a typewritten file, anything digital can be copied a million times. So there's no scarcity in digital land. It's very easy to hit a button and print. Digital dollars, right? Fiat. They just hit a button and they got more fiat. What Bitcoin did was they solved the problem of creating something where they created digital scarcity. And so they've got an algorithm and a system. It's distributed 20,000 nodes around the world, a bunch of miners who process the transactions, where there's legitimate digital scarcity. There will only be 21 million Bitcoins ever. That's the system, and it's hard-coded. And changing it's almost virtually impossible now at this stage in its life. So what you've got is a digital form of something that'll be scarce, which is called one Bitcoin, and I liken it to digital gold. And obviously the value of place to it is all a function of the marketplace. But the marketplace, as Menger said, money is the most liquid thing. The marketplace looks at what's money and looks at the characteristics of any sort of money or asset. And then places a value on it. Right now, the value of Bitcoin's in the $90,000 range. It started off much lower. And money, in my view, has always been a ledger. Before gold even existed, people kept score by putting marks on the walls of caves. So, money is just a social obligation that says, I owe you this or you owe me that. And so it doesn't necessarily have to be a physical thing like gold, as Peter Schiff contends. But it can be. And so that's kind of the brief summary. And a lot of people have gotten thrown off the track because of all the other cryptos are all total, and there's a lot of fraud and Sam Bankman-Fried and everything else. But Bitcoin's actually a technological innovation that people should study. So starting from that as a first principle, Bitcoin's got one advantage over gold, and that is gold is widely distributed. It's been around 5,000 years. It doesn't go up very rapidly because everyone who wants to own it already owns it or has known about it for a long time.
Although Lawrence Lepard is aware of the dangers associated with Bitcoin, he is nevertheless optimistic about its future. The network's catastrophic failure is one of the main risks, but he believes this is extremely unlikely considering Bitcoin's 15-year history and the fact that more than 900,000 blocks have been successfully mined. Government interference, particularly from governments that view Bitcoin as a threat to fiat money, is another issue. Despite these risks, Lepard is still hopeful. He cites Bitcoin's demonstrated tenacity and growing international recognition as compelling proof of its longevity. Additionally, he warns investors to stay focused, advising against getting distracted by other cryptocurrencies, many of which he views as either poorly designed or outright fraudulent. For Lepard, Bitcoin is in a class of its own, standing out as the true innovation in the digital asset space. But that's not all. Let's get back and hear what he has to say. Please don't forget to subscribe for daily content.
I think the younger generation, is tending towards Bitcoin versus gold. I think the older generations still buy gold. I think central banks still buy gold. I think, people in India buy gold and China buy gold. Bitcoin is still very early days. Just to put it in relative market terms, the total available Bitcoin today is worth just under $2 trillion at today's price. The total available gold on the planet is $16 trillion. So, if Bitcoin has sucked off 2 out of 16, of demand, how much has that really damaged gold? My view is they are both going to work, and either one is a good sound money investment. But that if you can stand the volatility and if you understand what you're doing, that there's more upside optionality in Bitcoin than there is in gold. So yeah, it's and over time, yeah, it could steal gold's thunder. It's not as bad as cars and horses, but I'm trying to think of another analogy that's, I don't know. But there is, gold is an older form of money, very sound, very proven, and Bitcoin is a newer form of money.
No.
The other risk in Bitcoin is just the existential risk that the whole network blows up and it doesn't work. I don't think that's a very big risk after 15 plus years and 900,000 blocks or 870,000 blocks, but it's not a zero risk. I own them both and a lot of both of them. So, I think they each fill slightly different roles. If you think about money from the beginning of time, every form of money has been dilutable. And even gold is dilutable. Only 1.7% a year gets added to the underlying base, but that's something. And Bitcoin right now, only 0.8 gets added to the underlying base, and every 4 years that gets cut in half. So it'll be 0.4 and then 0.2 and then 0.1. Eventually, there's effectively no dilution. So what's the value of a kind of money with zero dilution? I mean, we really don't know. We've never had one before, and I think that's part of what makes this thing so interesting, and it makes me think about how high is up. And I was at the show and I talked about how I think this thing could go from 90 some odd thousand to a million, and then I think it could go to 10 million. And I heard a couple of the older people in the front row scoffing like that's ridiculous. And but I don't think they're necessarily thinking through, the implications. I'm sure. I mean, I bought Microsoft. It's split adjusted now. It's 6 cents a share, and now it's at 400. I mean, it's when you get a network, when you get something that has, or Google was up, 2,000% from its IPO price. When you get something that is a leading network thing, it can become extremely valuable. It's kind of a different paradigm. And, think about it, in the history of investing, there aren't that many things that have returned more than 100 times your money. And yet the three biggest networking businesses have all returned thousands of times your money in under 20 years. I'm referring to Amazon, Google, and Facebook. And so here we've got a monetary network business with a limited supply, and all those could issue stock. They didn't because they had positive cash flow. But here we've got a limited supply of stock, i.e. Bitcoins, and we've got a monetary network that's growing. I mean, these things are going to go up in price a lot. That's my belief.
Lawrence Lepard provides a thoughtful analysis of gold and Bitcoin, highlighting their complementary functions as wise financial investments. He recognizes a generational gap. Whereas older generations and organizations such as central banks continue to favor gold, younger investors are attracted to Bitcoin. This discrepancy results from Bitcoin's potential for exponential growth as a more recent form of currency compared to the relative maturity of gold. According to Lepard, the market value of Bitcoin, which is currently at $2 trillion, is small in comparison to the $16 trillion worth of gold. Both assets continue to be valuable hedges against the decreasing value of fiat currency, even though Bitcoin may gradually overtake gold in the market share, citing its unmatched scarcity and function as a monetary network with enormous development potential. He views Bitcoin as the most fascinating asymmetric investment of his 43-year career. Lawrence Lepard also gives us a compelling decision. Although gold and Bitcoin have different uses, they are both capable of preventing the devaluation of fiat money. While Bitcoin's unmatched network expansion and scarcity present exponential potential, gold's centuries-long history offers unsurpassed stability. Lepard's second approach emphasizes how crucial it is to strike a balance between innovation and tested security in the current unstable financial environment. If you found this analysis valuable, please like this video, subscribe to the channel, and turn on notifications for more content into the world of finance and cryptocurrencies. Share your thoughts in the comments. Are you Team Bitcoin, Team Gold, or both? Your engagement helps us bring you more insights like these. Thanks for watching, and we'll see you in the next video.